All right, Yahoo beats. Not necessarily a surprise, but the search engine reported 24 cents a share in profit. That compares to the 22 cents a share estimate from Wall Street analyst. Clayton Moran is one of the top analysts for Yahoo. Based on his calls for the stock, he is senior vice president at the Benchmark company, and he joins us on the phone from his office in Boca Raton, Florida. Clay, thanks for joining us. Let's talk first about what we saw in the numbers. I mean, I feel like the revenue numbers lately especially are more important to look at, since a lot of companies seem to find it easy to beat on the EPS side. What do you think of Yahoo's release?
The fourth quarter revenues were in line with the expectation, but what's interesting about the fourth quarter is they didn't beat. Their peers last week, Google and eBay, both beat nicely in the fourth quarter, especially Google, as the internet growth accelerated during the holiday period. Yahoo didn't experience that, and Yahoo continues to significantly underperform the internet industry.
Clay, if they significantly continue to underperform, why do you have just a hold rating? Why not just put an outright sell on it?
Oh, that's a really good question, and that's because of the Asian assets, which has been widely reported that they could certainly monetize those assets and unlock some value. So from an operating perspective, you would call this stock a sell. But from sort of an asset support perspective, it brings it back up to a hold.
Hey, Clay, it's Julie here. Carol Bartz has managed to cut her way to profitability here. At least that's been the case. But it looks like not only is the revenue forecast short for the first quarter, but the income from operations forecast is also short. So has Yahoo already run out of the cutting that it can do?
Well, that's a good question. We'll have to find out exactly what's driving the cash flow forecast. But you're right on. The first quarter guidance is disappointing. It's below the current street expectations. And there's really, no signs here of improving the operations.
They recently hooked up with Microsoft. They're, working, they missed out on doing a deal with them. I mean, is there something along these lines, too, that you think could come down the road, or is that ship already sailed in your view?
I think that ship's already sailed. I mean, they have the Microsoft search partnership that they've integrated with Microsoft now. They're sort of benefiting to some extent from the cost savings there. So I don't think there's anything bigger that will happen with Microsoft at this point in time. And, certainly we've heard scuttlebutt about AOL and private equity, but my view is that would be a complex deal that's unlikely to happen.
All right, but you're not changing your rating here. You're going to keep it at a hold, correct?
Yes, ma'am.
All right, Clay. Thank you so much. We appreciate it. Clay Moran there of Benchmark.